So I'm going to go into each of our property types and try to give you an actual example of how our clients are making money with it in this market, and how I have done certain strategies. A few of my examples are in there just for good measure. So the first area I'll go into, property type, is buying established. And really it's the more safest type of property to buy, because you're going to get a cash flow generally from day one. You don't have any building to do and any holding interest to pay before you've arrived at your investment property. So it is lower risk. It can give you access to prime areas that there may not be new stock available in. Some areas don't have the suitable zoning to allow higher density, or to allow all this new stock, so that they can be very good areas to look at. And the part that I really love about buying established and what makes it so much more reliable is that you've got all that history to use for prediction. And when we look at the newer areas, we can't say this is how it's performed in 1 year and how it's performed in 5 years and how it's performed in 10 years, and all the prediction tools don't even apply. So it really gives us a lot more to go on. And what we often find with the more established areas, because they've got their amenities, their services, they're a lot more in demand ongoingly, so they have more of a steady growth, whereas the outer areas tend to take a while for the supply to get taken up, and then they have more jumps in growth, and then they take a more steady growth approach after that. So negatives, if there are any, is that if you've got an older property, there can be much higher maintenance, and a lot of people don't factor that in. If you've got your hot water system going this month and your gutter's going this, 2 or 3 months later, and then your tenant is, wanting this and wanting that, and we can try to, minimise that, but there's many things that crop up that you don't even think about, and you do need to keep your property maintained. You have lower tax deductions, and I'd never suggest that you invest just for tax deductions, but because you don't have as newer fittings and you don't have a new building, you're not going to get tax benefits at the end of the year. It's usually typically slightly cash flow negative, depending on all the specifics, but because you don't have that extra tax deductions to make it neutral to positive, they tend to be slightly on the negative side. When we're buying established, I'd suggest that you focus on freestanding villas and houses in this market at the moment. Don't go buying high density apartments. I'm just talking in general. I'd focus on the suburbs that are going through gentrification and transforming, and with improving lifestyle and good transport. I would stay away from mining towns, and it's funny when we, not funny either, but it's when we call up a landlord and give them the difficult news that their rent needs to drop by $30 on their property. The ones that have property in the northwest, it's the easiest discussion ever, because their rent might have dropped by 50% or 70%, and a $30 reduction, they're like, oh, do it straight away, just keep it rented. So a lot of people have hurt really badly from investing up there, and the gains could have been were there to be made, but you'd have to get your timing absolutely perfect, and now they're really hurting. So I would also stay out of the tourism towns. Other ones to be aware of are old strata groups without sinking funds. Like, you need to look deeper and see whether there's the money to keep up with improvements, because if there isn't and they need lots of work, they're going to be raising levies and all sorts of things on you, which can really cut into your cash flow. A lot of people don't even think to look at the meeting minutes and look at the annual general meetings and the strata and the budgets to see how much money they've actually got accrued. And I'd be staying away from the bottom end suburbs with a stigma like Girraween, Callista, Armidale, Midland. We've seen how much they've hurt in the rental side and how they've hurt in the sale price side as well. So this is probably where I've spent like the majority of my time when I was preparing for tonight, is focusing on where I want to put my name to in predicting areas. Logan's laughing down the back there because. So these are my top 4 suburbs, and I've listed them in reverse price order from Willagee as my higher price suburb, Ashfield, Marangaroo, and then Beachborough. And what you'll see as you look deeper into these is that, especially with these top 2, other suburbs have gone around them. They're looking relatively affordable. Each of these is listed in a number of prediction tools, and then my other data that I put on the top is reinforcing that. So, and when I look at my formula, I try to have them all fit for rental yield, for vacancy rate, and then we've got the rentability side as well covered. So many suburbs can look quite good for growth, but when I go deeper, the vacancy rate is 7 or 8%, and the rental yield or the rental yield's too low for us to hold a property there, so I have to rule them out. So those are my top 4 for established. I didn't put together top suburbs for units because, as I said earlier, it's best to just wait and see on units, and that's what a lot of the prediction tools are telling me as well. Thought I'd give a quick example. The little dork down in the left corner is me. That's a property that I subdivided and built on the back, and I had to decide what to do with the front. And its value, this was at the end of last year, it was worth $310. This is in High Wycombe. I had to decide, do I fix up the front or do I not? So at $310, it was rented at $300 per week, or that's what the market rent was. We spent $16,000 total on paint and carpets and blinds, and we did the roof in the end, as you can see, and the garden, and it took us a month. I rallied all my uncles and brothers and friends, did a sausage sizzle and a few other things, get them around there. And I then was able to rent it out for the period that it took to subdivide and build on the rear, so we were able to increase the rent by $80 a week, and I sold the front for $355 to give us an extra $29,000 above the renovation cost. So if you look to do these things in amongst your investing, you can value add, and you might say, oh, well, what's 30,000? But it all adds up, and if you're doing this at the start of when you buy a property, you can not only value add with your reno, you can often buy it a lot better because the market won't be looking at it. And if you're open to doing a bit of sweat equity, I started out doing everything in my renovations and learnt the hard way that it's a real nightmare. But I can paint a house quite quickly now, and I don't want to. So I use paint. The last few that I've done, I just get complete trades, and thankfully we've got so many on our that service our rent roll now that we can connect you with them as well to really just more take the project management roles, my advice, unless you want a second job on the weekends. So an example of one of our clients that we helped 3 years ago, we helped him buy in Bayswater using our buyer's agency service, and he bought a 3x2 on 464 square metres. It was 2001 built, and we chose Bayswater with the aid of prediction tools and what we saw happening in the area. The property is priced within 20% of the median. It was on the market at the time asking $550 to $600, and we negotiated extensively on that to get it at $535, and he spent $5,000 in fix-ups, and we had his bank then valued at 560. So it's good on your front end to just pick up 20,000. That's a bank val as well, so it's obviously conservative. And then we rented it at 510, and I just chatted to him in preparation for today, and we're at 620 current val. So it's not like, you know, gonna change your whole life, 80,000, but it's in a down market, and it's an example of when you put the formula in place, you know, where it can leave you. And he's created wealth over this period when others have not.